I used to go through these roller coasters. I used to move my account 40, 50%, and then I would lose. And then it was taking a toll on my mentality in terms of my psychology and everything. I must have spoken to over 4,000, 5,000 traders easily or more than that. And most of them are looking for home runs. They want this one trade which is going to make 300%. While I talk to successful traders are very good at hitting singles. So I built this game of singles. I created this thing saying I'm going to take partial profits, because if I lock in a profit, then I'm not going to lose profit. So I did a lot of these fine tuning to reduce the volatility of my returns, because I knew that if I can avoid this drawdowns period, I will make a lot of money. They don't have the realization that in order to make money, I need to have a setup. And if you don't have a setup, then everything, whatever effort you are putting in, doesn't really matter, because you just don't have something which has got an age.
Welcome to the AlphaMind Podcast, hosted by Stephen Goldstein and Mark Randall. We are delighted to be sponsored by the esteemed Society of Technical Analysts, the STA, a not-for-profit body which explores and educates people on all aspects of price action in the markets. We are also delighted to be promoting their brilliant home study course, which is based on their diploma program, which has been delivered at some of the world's top universities. You can find out about obtaining a discount on this home study course by going to our website alpha-mind.net and scrolling down to the section on the Society of Technical Analysts. There you will find all details about how you can obtain a discount on the price of this brilliant learning program. Now on with this week's podcast.
Well, welcome to this week's AlphaMind Podcast, which we're delighted to have veteran trader Pradeep Bonde of StockBee. And StockBee has a massive reputation for informing and building communities in the trading space, but Pradeep himself has got an extraordinary journey of himself trading in the markets too, and we're delighted to have him with us today. And perhaps Pradeep, as well as perhaps give us a bit more intro in a moment, perhaps to start off with a question really for you. I mean, you see a lot of people, particularly in the retail space and the pro space, that come through your world. If you were to sort of just crystallize, what's the biggest challenge that these people are facing? And because we know an awful lot of them are failing early. Mm-hmm. So what challenges do you see on the early traders that are coming into the trading system?
I think that a lot of them have a very wrong understanding of how to make money trading. Like, they know about chart patterns, they know about indicators, they know about things, but they have not seen, or they don't know how traders really make money. And that is like having some sort of a formula kind of a setup, and using that formula setup and extracting money out of the market. So that is one thing which is a big understanding of setup itself, that they don't have the realization that in order to make money, I need to have a setup. And if you don't have a setup, then everything, whatever effort you are putting in, doesn't really matter, because you just don't have something which has got an age. And because it doesn't have an age, it just doesn't work.
Yeah, I think you're absolutely right. Setup is something that we see ourselves as being, to some extent existent, but when you start to inquire further about somebody's setup, you find that it's particularly weak, ill thought out, not based upon the right sort of historic learnings to guide them and give them a base of understanding. I think having the right base of understanding becomes the significant starting point that many can't be bothered to follow, as we say here. So anyway, so welcome to the show. Perhaps just beyond that, so the first question, if you can give us a bit of background to your journey, and of course you were in the great big corporate world on the marketing side for a while, and then you transitioned around the year 2000. What made you transition?
Basically, I was in marketing, like I was head of marketing for DHL and FedEx in India. Then my ex-wife, she got a job in US, and she came to US. So I came along with her. And that was the time when it was a dot-com boom. 1997-98 is when I came to US, and everybody was a trader. Everyone was like, there was a building full of day traders next to my house, and also everybody was a trader. So I didn't get into trading immediately, but I when I came in, because I had this background in logistics and delivery and all, I was contacted by someone. They were starting a startup related to delivery services, and I was recruited by them to start that startup because I had the experience and they wanted to do it in India. But the person who invested in that startup, the main person, he was into trading, and I spent time at his home, staying in his home. I traveled with him, and that time internet was not really, like, you didn't have internet on your phone or things like that. So we would be traveling to India. We'll get into a airport like Zurich or in Amsterdam, and we'll be running to find the nearest cyber cafe so that he can log into his account and see what's happening to his positions. So I was fascinated by this whole thing, what he was doing, and I was talking to him. So I had a little bit of an understanding of what he was trying to do, how he was making money. And then, as usual, like all the .coms, we ran out of money. And when I came back after that, money was has run out, and I was without a job. I was just like, and I came back, and my ex-wife at that time, she had bought stocks. She had bought Juniper Network. She had bought Yahoo, because everybody in our office were doing, and they were going down every day. So she said one day, can you have a look at this? I bought these stocks, and every day they're going down. So I started looking at it. I got interested. One thing led to another thing. I started researching things. I had like some databases which I built, and a lot of it is luck. I found something which worked very early, and in the second or third year, I found a setup idea which, like, I almost made 4 times my money in one trade, and I never looked back after that.
Okay, fantastic. Thank you, Pradeep, and it's a pleasure to have you on the show. There's some really interesting things you were talking about as you were saying that. We spoke just before the show started about the very high failure rate amongst new traders, and you shared some thoughts with us about that. Could you share those again for the audience?
I think, like, when you get into trading, right? You start reading the chart patterns or indicators or things like that, but no one tells you, look, how actually traders make money. One of the reason I think, and probably I became very successful, was because this person was already making money trading, and I had seen how he was capturing those trades. So there is some sort of a template, or there is some sort of a formula to making money, which retail traders have perfected over the years. But the new traders don't know that formula. They don't know how to make money trading. They know charts, they know indicators, they know markets or things like that, but they don't know exactly how I can extract money from the trading, or how do traders actually make money. What do? Many of the traders who get into trading have this mentality that they are looking for home runs, right? And everybody is looking for home runs, while I have probably in the last 24 years, I've been doing this for 24 years, and I've been, when I started my site, and I've been dealing with retail traders actively, I must have spoken to over 4,000, 5,000 traders easily, or more than that. And most of them are looking for home runs. They want this one trade which is going to make $300, 300%. While I talk to successful traders are very good at hitting singles. Right? They're just moving their account in 0.5%, 1%, 2% in one trade, but they're doing it multiple times. I know a trader who's very good, and I was talking to him, and he was up around 500% plus. And I asked him, how many trades did you do last year? And he had done around 3,000 trades. Right? None of the trades making more than 0.25, 0.5% overall on the capital, or his overall capital. He might make 8%, 10%, but his account was moving only in 0.5% or 1% increment. While when I talk to traders who are new to this game, they want to find like a stock which is going to double their account, triple their account. So they're operating from that mentality. They buy a stock, it goes up 10, 20%. They don't sell, or they just wait there for it to double, triple. And what I call as like the problem for retail traders, a lot of retail traders, is they have this island mentality. When a trade goes a little bit in their favor, they start thinking, oh, in 2 days, this trade make 12%. So in 1 month I'll be making this much, in 1 year I'll be making this much. I'll buy an island. On the island I'll have a bikini clad woman washing my Ferrari and waxing my ear hair, and then the coconut falls on their head because that trade ends up giving up that 20%, right? So
Yeah.
so
Yeah.
that's the mismatch between expectation and reality of trading, right?
Oh yes. It's, there are so many great things, but I love that island mentality. It's fascinating because this is something we talk about all the time. We talk about with our clients, and you mentioned at the beginning, you need to have an edge.
Mm-hmm.
You need to have a system. You need to have a process. It can't just be analysis.
Mm-hmm.
And this is what we talk about all the time. Analysis is a brilliant tool. You have to have a tool. You have to have a roadmap.
Mm-hmm.
There's this phrase which you may be familiar with. The map is not the terrain.
Mm-hmm.
So you go out there with this roadmap of analysis, but you meet the market in the terrain.
Mm-hmm.
And people don't have a process for that.
Mm-hmm.
They don't know how to navigate that.
Yeah, I think there is also like from just a human psychology or like a point of view, good traders, like whether when I trade, like, or any good traders I've seen and interacted with, they're using procedural memory to trade, which is the memory about procedures, right? It's an involuntary memory, like driving is a procedural memory, or swimming is a procedural memory. When you jump into swimming pool, then you don't start analyzing which arm I'm going to move, how am I going to breathe. It's like this, right? Or you get into a car and you're not even aware, and you know where the brakes are, where the accelerator is. So procedural memory is not an analytical memory, because analytical memory is different. Like I can analyze the industry, I can analyze the company, but procedural memory is memory about performance, my ability to perform a process. And procedural memory is what good traders operate from. That's why many good traders are very bad at explaining what they're doing, because it's involuntary, right? And I mean, you know how to drive, but if to tell somebody, how did I see that 3 cars ahead of me stop, that's why I slowed down, is like it's a instinct and it's a muscle memory, right? And that the new traders don't have that, or they don't understand. Look, and this procedural memory is so setup specific, because I trade a particular setup which is 3 to 5 days hold period, where stock makes 8 to 20%, right? Now I have a specific setup memory for that particular setup. I can do this blindly. I can like wake up in the middle of the night, run a scan and buy and sell automatically, right? But a new trader doesn't have a procedural memory, and if you don't have a procedural memory, you're just fumbling.
Yeah, and that's part of this learning process.
Mm-hmm.
I find with new traders that I do try to stress to them that this is a long learning journey. I try to use sport all the time, or music.
Mm-hmm.
We think of trading as a performance activity,
Mm-hmm.
not an academic activity. Sure, there's a lot of academic process goes into it, but the actual trading itself is a performance activity.
Mm-hmm.
And when we start to use examples like, you're never going to be a boxer in 6 months, you're not going to be able to walk in the ring with a pro boxer, you're not going to be able to play classical guitar probably in anything less than 10 years of practice. And in a way, trading is quite similar. You can play a very simple system, okay, and have that up and running almost on day one. But, unless you understand where that system makes money or where the pitfalls are, the pitfalls might not come along till a couple of years. And I think we're just for sort of sake of timing, we're recording this the week after the big stock market correction of early August 2024, which probably just looks like a blip at this point in time. But it was an incredible increase in volatility over a couple of days after the BOJ meeting and some other data, and a big sharp correction in dollar yen, and every market volatility exploded, liquidity collapsed, and until you go through one of those and experience it, and you suddenly, what happened there? And you realise you can't get out of positions, no matter how good the system.
Yeah.
Until you experience that, it's hard to really know how to be a trader, because that shakes a lot of people up.
Yeah.
So I think you have to go through many experiences, learning experiences, and people just aren't prepared for that.
Yeah, they're not prepared for it. Like I always say, like, look, and in order to be a successful trader, you need a setup, you need a process. But once you have a setup and process, you still do not become a successful trader till you have a situational awareness, because you have to know whether this particular market condition is suitable for my kind of a trading. What kind of a situation I am in, like, and as we were discussing, I came from the DHL FedEx background, and when we were in India, we were flying planes, and in the aviation industry, situational awareness is like very important, because plane accidents happen because the pilot loses situational awareness. He can fly, he knows how to fly, right? But for that particular period, or he underestimates the weather condition, or he loses his what is called a situational awareness, which is like US aviation, like the US Air Force created this entire terminology called situational awareness during the Vietnam War, because they were losing a lot of planes. And they were losing a lot of planes because the pilots were making pilot errors, not because the planes were faulty. So they have this training program which is called situational awareness for pilots, and they have this conceptual framework which is called UDA, which is like you observe, then from the observation you orient, and then decide what course of action you need to take, and then act. So it's a loop which they teach the pilot: observe, orient, decide, act. UDA network it is called, which is like a very well-known program which every pilot in the US Air Force has to go. And the commercial airlines have adopted the similar situation. So when we were operating cargo flights, 2 hours before every flight, there is to be a situational awareness meeting between the pilot, the ground staff, the place where they're going. So you decide what kind of a weather condition is there, what kind of a cargo are we carrying a live cargo? So in case there is a problem, where are we going to land, which is the alternative airport? So all this situational awareness determines how that flight is going to be operated that particular day. Are we going to carry more fuel? Are we going to have like what kind of a contingency planning we need to do, because we are carrying, say, live cargo. Sometimes we used to carry live chicks, the chickens, like live chickens. So you have to have the situation thought through. So same way as a trader, when I come in the morning, I'm doing situational awareness. I want to answer the question, is this the right environment for my setup, and what adaptations do I need to do if the situation is not right for my setup? Now this is a higher order skill than just knowing a setup and a process, because if you are a good trader, you know how to do it. But if you don't have situational awareness, you're time and again you're going to get caught in sell-offs, or you're going to get caught in situations where it's not something you expected it to work and it doesn't work. So situational awareness is another skill which is required once you have a profitable setup. And you need a framework for developing situational awareness. It's experience creates situational awareness, but you can also create a framework like the US Air Force has, which is UDA, which you observe what is happening, what is working in the market, why it is working like that, and then what kind of setup, what kind of adjustment I need to do to my stop. So it's a constant adjustment which you have to do, and which is difficult for a new trader because he doesn't have that skill.
It's very interesting, isn't it, that when you think about trading, but then look of these examples in real life, like learning to drive, for example, where at some point it becomes, you've been through rain, you've been through snow, you've been through driving on board tyres, you've been through battery failure and jump starts, and you can drive, right? And you can then drive faster, and then you can manoeuvre around risk. And yet people don't seem to want to spend the time to think about those things in the world of trading. They want the money, as you say, as home runs. And I like the way you sort of perhaps allude to cricket in some sense of singles are good. The reality is, keep having singles and don't stray into trouble. Some people that are reaching too fast for money that want to hit sixes on every ball, doing the cricket analogy, at some point you're going to whack out too irresponsibly and you're going to be bowled out. So you're going to have to leave the crease and be sent off pitch. Well, I think, as Steve said, sport has some examples. I think cricket's quite an interesting one. I've not sort of thought about that before, but actually, singles are good. I mean, singles are a good way of accumulating runs, where you're protecting yourself. And occasionally you'll get a chance. But, single philosophy good. And this idea that you're starting off with an analytical memory that needs to mature to this procedural memory, but it only matures through time and experience, and you learning by doing. Now, that's not necessarily learning by reading. That's actually physically getting involved and going through pain, going through the journey, changing setup, adjusting setup, creates at some point a reliable procedural memory that then, I guess you can say, you've got a reasonable setup for a market, but you're always going to be looking at fine-tuning it. And I think it's really important to reflect on the OODA model of anything coming out of military. We're quite interested as well that the observe, orient, decide, and act type process fits very, very well with how you should be looking at markets. And so, it's interesting to me that people say, well, what's the answer to trading? Well, the answer's out there. You may well have that experience from your own sort of legacy, as you did from these big logistic companies. And that's a model that actually you can apply to some extent to you being successful in trading. And I think we mustn't forget that. Sometimes we know the answer. It's just that we need to kind of re-engineer it into the language of the market. So fascinating. Thank you for sharing that.
I think going back to your analogy of cricket, if you look at cricket, it's a very good thing to look at, right? All the people who have scored the maximum amount of run in their career, they are very boring players, right? Jeb Boycott or Rahul Dravid or all these, they were just accumulating singles, right? And the flashy players didn't end up making a lot of money in their entire career, while the one who are good at playing defense and just like hitting singles, occasionally they will hit a mini home run or home run 4s or 6s. They accumulated 20,000 runs, 30,000 runs, right? So,
and it's important. They had a defense strategy as well. They had a much better defense strategy. So as well as having an attack philosophy that was sustainable, they also had they were conscious of how they defended themselves at the crease in cricket, rather than lashing out and looking for the hero trade. And then, it's a different level.
Yeah, if you survive in cricket for 2 days, you end up making a century or more, right? And it's the same thing in trading. You keep hitting the singles, and by the end of the year, you might hit 300 singles. It still is like a lot of money, right? But it's not very. People are not like, when I tell people, look, you want to become a good trader, first build a singles skills, develop your single skill very well, and then start thinking about home run. Is that what they want to hear? No, because then how am I going to make like a 30%, 40% in 1 week and month? So it's a mindset problem also, right?
Well, I think it is, and maybe there's a cultural problem in the background. We see some of the crazy adverts out there that trip into our world off of YouTube, and that promise the early gains and every trade's a 400% profit, but in reality, I think what Warren Buffett's historic number is 8% or 7% or something over his history. yeah, and we have to remind ourselves what is realistic and what isn't. And yeah, going back, I like fitting in cricket to this. I think is very interesting, Stephen.
Yes.
Yeah, it's people are not very good at thinking into the future. And there's one of my favourite models to go through is the compounding effect model. If you can compound gains, let's just imagine you traded for 25 years and you started with $50,000 and you made 0.1% per day on average. And you reinvested that every year back into your trading. At the end of 25 years, you're going to be worth $33 million. No one thinks of that.
No.
And that's on 0.1% of that. That's a very boring 30% a year on average.
Yeah.
Like you say, everyone wants to make the big home run. They want the Ferrari trade. So really what they're doing is they're turning up, buying a lottery ticket. And yet if they're serious about trading, that's what they want to be doing. There's money to be made. We see it with retail traders. We see some excellent, exceptional retail traders. As I mentioned to you, the tweet I put out a few weeks ago, where I said I coach traders from all walks of life, from major hedge fund traders to retail traders trading their own money. And it wasn't a world I came from. I came from the professional trading world. So I didn't know much about it, and I've got to gain this huge respect for retail traders. People at home doing it on their own with their own money. Okay, taking a few years to get going, but continuing, battling through, actually building up a business with their own money. And if they don't make money, they literally don't eat. They eat what they kill. And I think that creates, if you can make it that way, I think they are the best traders in the world, a lot of them. Pound for pound, for me, they're better than the average professional trader. Because the average professional trader gets paid to trade. I got paid to trade, whether I had a good year or a bad year. Obviously, if I had a few bad years, that came to an end. But, I got paid to learn as well. And I was surrounded by many other great traders. We had this huge edge, this news flow. You're literally in the middle of the markets.
I think one of the advantage, because I know a lot of people who are like institutional traders also, because some of them are smaller hedge funds and I talk to them and money managers. One of the big advantage they have is when they get in right day one, they have role models. They can see people around who are trading. They can see how they are doing it. So for a retail trader, that's a disadvantage, because you never know. You don't know a person who's making money like at a trading, right? You sit if you go on a trading desk, you can see people how they are making money. You can talk to them. You can see what they're doing, which is a advantage basically but retail traders have other advantages also if they make it, and which is the flexibility. They can do things which institutional traders may not be able to do. So
we will return to the podcast shortly after I have shared with you details of my new book, Mastering the Mental Game of Trading, which was published earlier this year. This book delves deep into the crucial realities and mental challenges that traders face in the game of trading. Many traders make the mistake of believing that analysis is the key to success in markets. However, if you don't have high-level abilities as a risk taker with a solid and robust risk process and a strong foundation in your knowledge of risk taking, then even the best analysis in the world will be of little use. Trading success hinges on a range of attributes which are required of yourself that are necessary for effectively managing risks, navigating market uncertainty, and making optimal decisions within that chaos. It is this battle with yourself, in yourself, and at the nexus of where you meet the markets that represents the key challenges every trader needs to overcome in order to succeed in this incredibly difficult game over time. Mastering the Mental Game of Trading aims to guide you through these challenges using unique frameworks, models and theories drawn from my 25 years as a trader, enriched by the real narratives of others that I've encountered in my journey as a performance coach over the last 15 years. Mastering the Mental Game of Trading is available on Amazon, where it is currently rated 5 stars, and all good online book retailers. It can be bought in paperback, Kindle and Audible, and is also available in Italian under the title Pensa come entrada. Now let's return to the podcast. You talked about situational awareness. Some people have an edge from their previous career as well, coming into retail trading. It sounds like you had an element of that, something prepared you better than most people to walk into this world. Would you say that's fair as well?
Yes, there are like one major advantage which I had over many other traders. Like there are a couple of them from my previous experience, because my previous background was in marketing, and before I did this marketing side, I was in advertising. So I had a very creative and innovative background, where you're taught to find solutions to problems and not just sit there and say, this is the problem, what do I do? You are paid to find creative solutions, innovative solutions, right? A lot of traders, they are focusing on the wrong thing. They always are focusing on discipline. Discipline is not the solution to your trading problem to your solution. Like you have to find an innovative way where discipline doesn't become a issue, right? That innovative and creative mindset is required to be a profitable trader. All successful traders, I had a dinner with Mark Minervini. I spoke to Mark Minervini. I've spoken to some of these other successful traders, right? At this stage, when they become successful, they say discipline is what made them successful. But if they are so disciplined, they would have never found the setup which made them the money. Because you need creativity, innovation to find a new setup idea like VCP, or to find a new way of doing trading. Now, creativity and innovation is what I brought to this industry when I came in. So that was one advantage, very good advantage which I had. The other advantage is I work for industries which are extremely process driven, right? Both DHL, FedEx, you're doing millions of packages a day. It is extremely boring, process driven business. Like the jokes in our industry used to be like, if you get married, the company will give you a 260 pages manual with step by step instruction as to how to kiss your wife, right? Because it's like that. You are telling a courier, you can only write like this. The first thing you have to write this. You have to have the scanner only on the right hand side. You need to use the key like this. So it's like insanely process driven industry. So when I came to this industry, I replicated processes. I brought this process kind of an approach to trading, where I'm saying, okay, process. If you see my logo also, it says StockBee methods from markets. So the process approach is when, if you have a well designed process, money is an outcome of following that process. So those are advantages which I brought into this industry when I came in, and that also helps you a lot thinking differently, because if you have a creative, innovative mind, you're always thinking, this is the problem, I'm getting stopped out. I can't be just disciplined. I have to find some innovative, creative way to overcome this problem. And I think most traders have this basic problem. They are just and continuously keep on saying the same thing, saying be disciplined. Yeah, I went to a residential boarding school in India, and our school had a motto saying discipline builds character. And it was there was a huge board painted on top of the school saying discipline builds character. I can tell you, every single one of my classmates who's successful today was the person who got into trouble. I got into so much trouble when I was in school because discipline was the last thing which we were doing, right? So, discipline builds character, I understand. But creativity and innovation builds businesses. Creativity and innovation makes you a good trader.
That's a brutal piece of honesty there. That certainly resonates with me. That actually, it's that sort of troublesome side. That's the thinking outside the box. That creative streak that is never comfortable doing nothing. That just wants to explore. That has a different energy. And once it explores very peculiar ages at times. That creative wandering mind is the mindset that's refreshing. To some extent, I suppose that had to be opposing the fact that a lot of the stuff you were doing from your process world was kind of boring in a way, right? You have to do the boring as well.
It's very boring.
Yeah. So to offset the very boring, having a creative mindset, you can survive that, right? Yeah. But both are needed in trading. So this concept of there's going to be stuff that's the hard yards that's going to bore you stiff, but it's important. But also have something inside you that is always impatient to think about the new ideas and to explore new ideas, because you kind of need that to offset the fact that you're going to be doing boring stuff, and through that you get some sort of balance. And I think actually in reality that's probably quite rare. I know when I was in the trading world, there are very few people that I met that I'd say were actually creative. There was a chap in Portugal I met, and we were, we'd have more conversation about creative stuff than the markets when we talk together. And we always said that we were frustrated creatives in the trading world. That perhaps trading wasn't even enough for us to show creativity, but actually it always meant that from a broken point of view, I played rounds with some very strange ideas to kind of work out, trying to get an edge as to where the market might go to, and actually quite a good reputation of building a customer base, because it was interesting and something actually worked, but it worked because you were looking at things, you were willing to look at things differently, rather than the same old. So I had, again, another very refreshing point, well made, Pradeep, so thank you for that. So if you looked at the space now, a lot of people coming through your world, right? You mentor people and coach people, and of course cover them in your communities. I guess in a way, would you say that they're deficient in process, they're deficient in creativity, and they want money too quickly? Is that almost a trait for the people coming through?
Most of the people who, when they come in, they have that mentality of, as I said, island dreams. But the one who make it, right? Because I have many traders who made it big from my community, and I have studied them. I talk to them. I am still in contact with them. They have the same characteristic of this ability to find solutions to their problem. They are tinkerer. They just cannot sit there and accept, look, this is the way things should be. So they are innovative. They may not call themselves innovative because they don't think themselves they are creative, but a lot of people who are creative don't think that they're creative. But they find tweaks, right? They a lot of time, all these setups which retail traders or even institutional traders are trading are not a secret. Like, I know institutional traders, I have friends who work for big banks and all. So what they trade is not a secret. News based setups, catalyst based setups, or essentially the order flow based kind of setups are very common, right? And it's not that, but the small tweaks people make, small innovation they make in trading, that is what creates an edge. Right? I'll give you an example. Like, every single retail trader does this anticipation kind of a trading where they create a watch list in the night. They sit through, scan stocks, look for stocks which Miller Winnie popularized this VCP, volatility compression pattern kind of a setup, and all traders are doing that. What they're doing is they're doing this in the night. They create this watch list, and in the morning they're trying to enter this trade, right? So when I looked at this problem, I said, look, this is the terrain which I am dealing with. All these people, after the market closes, go through these charts, and then in the morning they are trying to enter. So I can create an edge here because I know what they are going to select, because I understand VCP setup. I know exactly what they're looking for. So I created a process innovation. I do this work at 3 o'clock. I find these setups and I enter them before the market closes, trying to front run them, because I know the next day morning they are going to buy, right? And so I buy them before they buy. So this is a very small process innovation, right? Same setup I'm trading as they are setting, but they are trying to enter it in the morning, and I'm already sitting 358. I entered my order. I'm just sitting, and many times because they come in and they're buying it, and the stock goes up 8 or 10% in the morning in the first half an hour, 1 hour, I just sell, and I'm done.
Happy days. It's interesting, and sometimes it's the timing of these things and actually shifting process and being bothered to do it as well, because I guess some people may not be bothered just after lunch to feel the energy they've got to do these things. They kind of want a slightly wind down trade, but actually being bothered to do it and setting up your edge and thinking, I've still got time to trade. That's going to be ahead of the game if I put these things in place. And then you capture the momentum of the next day. So you're getting out when they're getting in. So it's
and sometimes because they are all looking at the same thing, they're all trying to enter, and in the first 5 minutes there is a scramble, and the stock goes up 5-6% just because there is an order flow there, and I just sail into that, and I'm done for as far as that trade is concerned, because I am getting free money. I entered 358. I don't even need a stop, right? Now this is a very small process innovation by understanding what others are doing, what is the trade is all about, and what is the flaw in their thinking in terms of process, right?
Yeah. No, it's fascinating. As you sort of mature in your journey, and of course I'm sure you've still got many years of doing this. But how do you see trading evolve? Do you see any of the things going on in the market sort of changing the way people are going to have to think about how they trade? Obviously, we've got AI has turned up in the last 15 months, and we're all wondering what on earth that means. But is it going to help or is it going to hinder, do you think?
I think there are a lot of good things which have happened in the trading. The market has become faster, but there are, like, the retail traders have much better information sources today. Retail traders are trading better setups than what they were trading 10 or 20 years ago. Because I talk to retail traders, and many of them are trading this parabolic short setup, or they're trading this small cap fading as a setup. Now this is an institutional quality idea, right? Because all the small caps, they are basically fugazi. They are just like in a move 10 days, 15 days based on some just like some imaginary catalyst. They're all going to come down, right? So the trade is both sides. Now the retail traders, there is an entire bunch of retail traders who have perfected this. If you see the investor underground kind of traders, or like even this is what Christian Kulamagi was doing at the beginning of his career, which is shorting, this overreaction shorting. And it's a very good setup. Now this has spread to retail traders because of social media, because of this Discord, because of this people who are talking about it, or like this news reaction kind of a setup, which is episodic pivot, which I pioneered, is a kind of thing which institutional traders do. They look at the news, they look at what is happening. If it is a surprise, they buy it. Now retail traders are onto that game also. High short interest plays, the retail traders have really benefited from it. So the information flow among the retail traders, if they are motivated, is much better. They have much better access to coaching. They have much better access to people than when I started 20 years ago. Internet was so rudimentary. If you signed up for a newsletter, they used to send a telegram. I remember in 98, 99, they used to send a telegram saying, buy this stock, like, and in the morning the post will come. So considering that, you're in such a better situation, and you can learn, because a lot of traders who are successful, they are on YouTube, they are on these channels, live casting. So you can see, you can copy, you can mimic. So yeah, I mean, there are challenges, there is information overload, but there are also very good things which I think happening. If I was starting all over, I would become profitable much more easily, because I can see what works in the retail space much easily.
We will return to the podcast shortly. First, long-term listeners will know we have a partnership and collaboration with the Society of Technical Analysts, whereby listeners can obtain a discount on the price of their brilliant home study course, which is based off the diploma program which they deliver. We are also delighted to announce a new collaboration. This will be a groundbreaking high-performance trader learning program. This innovative program will concentrate on enhancing trader performance by developing traders' risk-taking abilities, risk processes and risk capabilities, and providing a robust and comprehensive foundation for successful trading. This learning program is designed to benefit both professional and retail traders. This learning program will be conducted over 10 2-hour live Zoom sessions from March 2025 to June 2025. There will only be limited spots available on a first-come, first-served basis, so we do encourage early registration once registration opens. Further details of this will be shared in due course. If you are interested in getting advance notification of the details, please email us at info@alpha-mind.net and provide us with your name and email address, and we'll make sure that you will be added to the early notification queue. Now back to the podcast. One of the things I've picked up from you since the start of this call, in many different ways, is you're a systems thinker.
Mm-hmm.
And that may have been from, again, your experience in your job before, but I should imagine you had to be a systems thinker in that world. We did our last episode of this, or our second last episode it was, this, myself and Mark, talking about systems thinking, about looking at the system and trying to understand it in much greater depth, understand what lies behind it. And interestingly, we talked about an example which really comes from the world of logistics. So I think that's kind of how relevant it is to you in that sense. And I think sometimes, until you understand the market as a system and see it as that, and that also you are part of that system, so you're both of it and you're observing it, that can become really empowering. And a lot of the best traders we see, both professional and retail, kind of have this systems perspective on looking at the market as a system, not just numbers going up and down. They start to look at the fabric of it, what lies behind it, what that implies for liquidity, what that implies for sentiment. And how do you feel that I mean, am I correct in saying that you've got a really deep understanding of that? And for you, do you feel that is a sizable edge for you?
Yes, see, like the system part of it, like, because when I worked also in these industries, I also dealt heavily with operational research kind of people. We had people who are PhDs in operational research, designing the system. You are always dealing with a system problem in logistics, right? And basically, or a process problem. So that is how I look at the market as to how do I build, I say in my on my site, like my private coaching and all, you have to set up a trade factory and run it like a trade factory as a total process thought through. You're not buying a stock and then asking where to put a stop. It has to be part of your everything. When you select a stock to trade, quality control has to be built in, so you have to have criteria for quality control. So I bring in a lot of that kind of a thinking in terms of looking at this as a process problem. I always people come to me all the time and say, I have a FOMO problem, I have a psychology problem, and I always keep telling them, look, I know so many traders who are successful, and I've spoken to them. None of them went to a psychologist to solve his trading problem, right? Because psychologists cannot solve your problem. Your problem is some process problem. You start fixing the process, you find a process solution. Like I worked when I was in DHL with a process engineer. We were trying to improve, because the problem is, in a city like Bombay, you're picking up domestically, we're picking up 5 million shipments in 2 hours, and you have to put it on the flight, right? It's a big problem logistically. And I was talking to him, and we are looking at solutions, and that helps a lot for a trader also. And his approach was, okay, this is the problem, let's find solution A, solution B, solution C. Try out solution A, does it work? Try out solution B, does it work? Solution C, if it doesn't work, create another 3 solutions. And this is what I teach traders. Okay, you have a problem, you're getting stopped out. Let's find solution A, solution B, solution C. Either enter early, or put a wider stop, or decrease the size. Now try out solution A, solution B, solution. Doesn't work, create next 3 solutions. And some solution ultimately may not be the most ideal, but you found some solution system for a solution. Then you try it out, you fine tune it over the period of time. So over a period of time, your trade factory becomes more like very efficient trade factory, because you eliminated these problems, process problems or systems problem, and as a result, uh, it's just the system which you are working, and the profit is just an outcome of a very well designed, well run process.
Yeah, it's all about process. I mean,
Mhm.
that's something that we banged on about for so long, and people, they come to us. I've got this problem here. I've got that problem there. Let's explore your process.
Mhm.
Let's try and understand it. Let's try and sort of unpick it.
Mhm.
And you find nearly always, like you said, the process is the problem. They don't have a process that is workable. And I think you said something within that, workable for them.
Mhm.
We're all different.
Mhm.
What works for some is not going to work for others.
Mhm.
Mark, you look like you're trying to make a point
Eat
there.
my pencil. I like the idea of this trader factory thing, that you've just got, and you've got quality control at every kind of level to,
Mhm.
to kind of audit what you're doing, in a very serious way, as being part of the, how you manage yourself through the trading process, and being serious about it, having a multi-solution approach. Try it, fail, figure out three more things, try them again, fail, but keep on testing, because you would kind of go through that sort of process in industry, but actually because it's trading, you forget about that. But actually,
Mhm.
I think there's this, learning from industry, I think is and military and sport, is, I think, the sort of the blueprint for understanding how do you best get involved in trading in a sustainable way to keep yourself, appropriately audited, so that you're doing the best you can at each stage, and
Mhm.
being a critique to it, and saying that went wrong, and it's because of this, so I thus need to change this, and that then follows a process. I like the fact that in that conversation we fitted the word fugazi in. I can't. It's the fact we were cricket and fugazi in this conversation is great. And Jeffrey Burkott turned up as well at one point too. But I think there's a point to this, right? There's a point to this, that actually it's the stuff that's not on the immediate radar screen for a trader coming into the market that they need to connect to and do well before actually they find themselves on the radar itself as being connected to the market, looking for opportunity. And
Mhm.
if you don't do that pre-work and all those important things that power you on your journey, then you're just going you're going to be wasting money faster than you can imagine, and you'll be out before you know it, and that'll be the end of it. That'll be the end of your trade, and that happens every
Mhm.
day in the
Mhm.
real world, every day,
Yeah.
because the island mentality is there.
I got a question before we, you've got a very strong reputation. You're very well thought of. You've had great success. What was your biggest obstacle that you had to get over when you started? What was your biggest hurdle when you first started in this business?
The first hurdle, the first 3 years were like really, really very tough, in the sense I could make money, and I am like, for a personality terms, I'm a high risk taker. Like, I have a personality, I have audacious personality. I take risk, right? And basically, I can put like all my account on a trade also, even for small trades. So I used to go through these roller coasters. I used to move my account 40-50%, and then I would lose, and then I would again do, and then it was taking a toll on my mentality in terms of my psychology and everything. So this is where I really developed this situational awareness as a filter over my trading, because then I thought about it and I said, like, what is it that we were doing when we were in DHL or FedEx, or what kind of solution is going to help me? Because I'm just riding a roller coaster. I'm taking my account 40% up, taking it down, again spending months trying to recover to it, take it again, then again. So that was the biggest and when I found a solution to it, I found a solution to it in multiple ways, because there's never one solution to the problem. So one of the solutions was, at that stage, I make jokes with traders, new traders, about this island mentality, but I had the same mentality in the beginning years, and that was one of the reason why I was like having this thing. So I built this game of singles. I created this thing saying I will I'm going to take partial profits, because if I lock in a profit, then I'm not going to lose profit. So I did a lot of these fine tuning to reduce the volatility of my returns, because I knew that if I can avoid this drawdowns period, then I will make a lot of money. The problem was, like, I was just going into these drawdowns and trying to spend time recovering these drawdowns. So that's when I re-engineered every single thing which I was doing about trading. I started emphasizing singles. I developed a set of ideas which will allow me to hit this lot of singles and only selectively do the home runs. And then I developed this whole thing which I call peeling a position, where once I'm in profit, I start taking partials and partials and partials. So a lot of things were done to reduce that volatility, and that was my biggest challenge. And since then, it's not a challenge. Much of a trading nowadays is like it's like just showing up and putting trades and managing them.
Yeah, it reminds me of something Peter Brandt said once, which is, your job is to make this as boring as possible.
Mm-hmm. Exactly. Yeah.
Yeah, that's it. So it kind of feels a little bit like that. The roller coasters are right, great. Everyone loves a roller coaster, right?
Yeah, but the emotional toll, and this is what I talk to traders about. If you are going to be one of those, like I have a friend, very good friend, trader, at the end of the year, he still makes money. But during the year, he'll be down 50%, 60%. Whenever I go to his office, he'll have a big bottle of antacid on his table. His eyes are popping out. He's like in a hyper. And he comes to me and he always says, and he knows what I do and he sees what I trade. He says, there is no masculinity in your trading. I said, like, yeah, but like I make money and I don't have to chew antacids, and I don't have to take all these medicines. And do you see me shouting and throwing keyboards? No. So boring makes money.
The job is to make money. The job is to, if you want to have fun, jump out of a plane with a parachute on your back. Yeah. Or climb.
You're not looking at excitement. If I want excitement, I'll do some other activity.
Yeah. It's interesting because, one of the things, again, we've seen in our work, we do these psychometric profiles. And we actually find a lot less high risk takers in this industry making it than lower level risk takers. And when we do find high risk takers, it's usually because they've done exactly like you just described. Mm-hmm. They've built in some sort of adaptation. They've added risk management. They've built in a moderator. We call it the sword and the shield. They know how to use a sword, but they don't play with a shield. Mm-hmm. So they have to learn how to do it with a shield at the same time, which is, it's going to lower their costs, but they're going to survive, they're going to live, and they're going to learn. And the reason we don't think there's as many high-risk takers is they just get taken out of the game early.
Yeah, you get taken out of the game. You take high risk, you are out of the game.
Yeah.
I think what we started that discussion and we discussed about this cricket, that's the perfect analogy. Like Rahul Dravid was an extremely boring player to watch as a cricketer, right? But he ended up making so many runs. Or those some of these, even the British guy, that Jeb Boycott. I think he was such a you could in a pen drying. You could watch pen dry. That was more interesting than see him bat, right? But how many runs he used to make, because he used to just stick there in one place, defense, and then once in a while a ball comes in, he'll hit a 4-6 and make so much money.
Yeah, he'd never make it in the 2020 game.
No, never. Only as a commenter he will make it.
Yeah. Mr. Randall, sir, I think it's time for you to come in.
Well, lovely conversation we've had, and I think, I love this analytical memory to procedural memory thing, and that's a journey. You need to buy into that journey, and importantly, do the boring stuff, because if you don't do the boring stuff, then you're not going to survive that journey for long. And situational awareness again, and I think the discipline versus creativity thing, I think is very interesting. Where actually we can be too tied up in discipline that shuts off the creative elements. Mm-hmm. So being bold and being someone that's willing to throw creativity at training.
Can I interrupt you, Mark? Can I interrupt you? There's that great phrase, isn't there? there's old traders, there's bold traders, but there's no old bold traders.
Yes, exactly. And I think I do want to go out with cricket, because we have so many Americans listening to this that they want to get their head around the game of cricket and understand that it is boring. It's about staying on crease, as it were, for as long as you can, and singles count. And actually, being a Jeffrey Boycott is perhaps the foundation for being a good trader. I should leave it with that. Pradeep, it's been a pleasure.
Thanks.
Thank you for listening today. Again, thank you to our podcast partner, the Society of Technical Analysts. Do check out the offer with regard to their brilliant home study course. If you are interested in understanding more about yourself as a trader, do check out my new book, Mastering the Mental Game of Trading. In the meantime, we wish you the very best of luck and look forward to you joining future episodes of the AlphaMind Podcast. Goodbye.